Banks, should the bashing stop? Can we believe Donald and his trade deal talk? And exciting news out of China as well. And finally, Westpac and its capital raise, should we buy into it? I'm Peter Switzer.
I'm Paul Rickard,
and we're mad about money. Well, Paul, these banks, they're being clobbered time and time again. Has it gone too far?
I think the bank bashing has gone far too far, Peter. I think some of the biggest issues with bank bashing is actually coming from the regulator. I think ASIC stuff around responsible lending and all the other stuff has been a huge cost to the banks in terms of...
Why are they doing it, Paul?
Well, I think everyone got a bit carried away. I don't know why they're doing it, but I think we saw a huge cost in the home mortgage market through Westpac and ANZ last year. Yeah. Shareholders are now paying for it. And we got this crazy idea about the models and whether people had to substantiate income and all the other stuff that they went on with. But it's sort of gone too far, and we've now got banks that are scared to lend. We've got executives that are scared to invest. Yeah. We've got this massive amount of money going into silly risk and compliance stuff, which really ain't going to do a lot for the economy.
And just correct me if I'm wrong, but one of the main reasons why we didn't go into a recession in the GFC was because our banks were strong. Now, they might have been ripping us all off, but thank God they were.
Well, at least we
were
knew
in a recession.
At least we knew they were ripping us all off, Peter. So look, and I think you've got to be very careful with this stuff. You can see almost... the impact now in the aged care industry. We've got another Royal Commission there, and you've got to be. I just think this stuff builds on itself. We're in this society where everyone wants to be
goody two shoes. We end up being poor shoes.
Well, we've got to let businesses be businesses and stop regulating. And I think that there was a reason for a Royal Commission. There was a reason the banks need to bring their behaviour in line. But we have to get the balance back to where it should be and let them prosper. Otherwise, shareholders will pay, the community will pay, and the economy will all pay it.
The big problem was there wasn't a star chamber to punish banks when they treated customers badly. That's there. It's called AVCA. The government's not really actually advertising, but it's called AVCA, the Australian Financial Complaints Authority. Go there and let's just see the bank's share price go up rather than down. All right? And dividends disappearing. Okay, Paul, can we believe Donald and his trade talk? 60%, he reckons.
60%. Well, actually, 60% is not a big number by Donald's standards. So
I know, but we never thought a trade deal would get this far so quickly.
But the market seems to be liking it, Peter. Yeah.
Yeah.
Look overnight, gold price off about $20. So risk off trade there. Bond yields up.
No recession
in the US. No recession. And really exciting news yesterday in China with the currency back under 7, which was a big level. In August.
Under 7 compared to the US dollar.
Yeah, so that means
it's appreciating.
The Chinese currency is appreciating because obviously the market's starting to expect that it's going to be good for business in China, more activity. That's going to mean the currency is going to be in greater demand. So whereas the other way we saw the Chinese government letting it devalue, now that's sort of turned around. So the market's basically saying, look, we actually think the trade deal is going to happen and that's going to be good for growth. So coming back to your point, the market certainly expects something big out of Donald. Can you believe him? I don't know.
Yeah, that's right. If only he was a little bit more reliable, then I'd be more happy. Now, Paul, everyone's asking me, the Westpac capital raise, should we buy into this?
Well, you don't have to make a call until the 2nd of December, Peter, so we have another 4 weeks or so to go. Yeah. It's going to be at the lower of $25.32 and 2% below the price of Westpac shares in that last week. So if Westpac shares continue to fall and say go below that price of $25.32, you could actually pay less than what the institutions pay. So you don't have any, if you actually participate now, you don't really effectively have any price risk until early December. So I think it's going to be pretty popular, Peter. It's only $500 million, not a lot amongst...
Well, because the rest are going to institutions, is it?
Already $2 billion has gone to the institutions at $25.
So they're backing Westpac?
Yeah, they're backing Westpac. It's only allegedly $500 million available for the investing public.
Punters
like us. And I think the Westpac dividend, the rebased dividend of $1.60, it was used to be $1.92. It's gone down to $1.88. It's gone down to $1.60.
It was 80 and 80.
Yeah, 80 and 80. That looks now reasonably safe, at least for the next couple of years.
Yeah.
And at a price of $25.32 and a dividend of $1.60, that's still a yield of 6.32%. Now,
Before franking.
Before franking.
Hoo-ha.
So I think this is still going to be pretty popular. Now, maximum of $30,000 per person. And I would suggest more likely to have a bit of a scale back. So,
Okay.
but if you put your money in now, you won't actually know the outcome till early December, and you won't have any price risk. So I think, although I've been a bit I've been a bank fan, and I must say I've been disappointed with both the ANZ and the Westpac results.
But there's been a lot of bashing, Paul.
And also the forecasts. I mean, the Westpac outlook for next year was pretty gloomy. I mean, no volume growth. Further pressure on margins, expenses just up a fraction still because of ongoing compliance costs.
Yeah.
They're basically telling you that earnings are going to be down again in next year.
But Paul, you've hung up with bank CEOs. Sometimes do they tell you a more conservative story, hoping that as the year goes by, it's a better story than come to the market and say, hey, we did better than we
bank
promised.
CEOs generally tend to be pretty conservative.
Yeah.
I mean, they are bankers, right?
Yeah, they are
I
bankers.
could use another word,
Yeah.
but I won't on air.
Yeah,
but
because you were one.
they're colleagues, brethren.
That's right.
But no, anyhow, so look, they are fairly conservative, but it wasn't a particularly optimistic outlook that the Westpac CEO painted, and the ANZ result was frankly just disappointing. They got to do a lot more work on their costs. It's going to be a cost play in banking, right?
Yeah.
They've got to get serious about taking out their costs. They've got too much going on in risk and compliance. This is partly the problem with the Royal Commission, Peter.
Yeah, I think if we get a trade deal, we get economic growth, these banks will start to improve because growth means that people want money, they'll borrow it, and the bank's profits will improve. But at the moment, we're in limbo. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.